Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video, I want to talk to you about the portfolio that my wife and I have, investing mainly in 3 single ETFs. We've been investing in the market for the past 7 years or so, but over time, we changed our approach to investing so many different times. And ultimately, about a year ago, we landed on this simplified approach of investing only through these simple 3 funds that are broadly diversified, giving us a global diversification. I'm going to walk you through that and see how this portfolio is now currently at one of its all-time high levels at close to $657,000. I hope you found this video beneficial. Let's get into it. All right, as you can see here on the screen, the portfolio is over $657,000, mainly, as I pointed out, invested in 3 simple funds. The first one, which is our largest holding, accounting for close to 91% of our portfolio, is shares of XEQT. XEQT is indeed iShares Core Equity ETF Portfolio. It's an ETF available for investors here in Canada. Through XEQT, you're going to get exposure broadly to the stock market globally in the world, including stock markets in Canada, in the US, international developed markets, as well as the stock market in emerging markets. As the name suggests, it's an all-in-one ETF that allows you to simply get diversified exposure to the entire world stock market. This fund, this ETF, in fact, was founded approximately 5 years ago, just shy of 5 years ago, back in August 7 of 2019. And looking at its return, cumulative return for this fund is showing to be a total of whopping 62% plus since its inception. Like I said, it's less than 5 years ago. And if you look at it based on different annuals, average annuals in the past 1 year, at the end of April, it was showing to be by 15.5%, more than 15.5%, 3-year annualized return of close to 7.7%, and annualized return since its inception is just shy of 11%. To be more accurate, at 10.8%. You are also collecting some dividend income. And XEQT does pay its dividend income on a quarterly basis with an yield hovering around that just shy of 2% annually when you look at it collectively. Now, with XEQT, their dividend income changes. Usually there are quarters that the amount is higher, the next quarter goes lower, and then next higher and lower, and that kind of trend continues. There's that pattern in there, but all in all, when we look at it as a year as a whole, you're collecting that approximately 2% in dividend income. For us, for my wife and I, we are putting that entire investments back into buying more shares of XEQT, and that's how we've amassed a much larger kind of collection of shares of XEQT in our portfolio. As you notice from this dashboard that I've developed on Looker Studio, we currently have 19,579 shares of XEQT, which accounts with a market value of approximately $600,000. So definitely our largest holding. The remaining portion of our investments are in shares of VTI and VT. Now, with VTI and VT, they're both traded in US dollars. And that's why we are holding both shares of these index funds in our actually RRSP account. So I'm a Canadian investor, and that's why holding these shares of ETFs in our registered retirement savings plan, trying to minimize as much as possible the impacts of the withholding tax when it comes to dividend income received from. VTI is Vanguard Total Stock Market ETF. It has a very minimal expense ratio of only 0.03, quite low, which is quite decent. It does pay some yield annually, roughly around that, roughly about 1.3 to 1.4%. Really focus a lot is more on the entire broad US market and not really so much on the dividend paying companies. That's why you're not necessarily collecting a ton of dividends, but worthwhile mentioning how it is. Year to date, this fund as of May 10 is up by 9.1% based on the market price. In context, if I compare it to year to date return of shares of XEQT, this was as of May 9th. For the May 10th, when I looked at it, the XEQT shares were fairly flat. So this kind of is almost comparable comparison in that regard. The year to date for XEQT is at close to 10.7%. So a little bit better return so far, at least in the year, for XEQT compared to VTI. With VTI, it tries to track the performance of the RRSP US Total Market Index, as I alluded to it earlier. Looking at the past returns, this fund now has been around for a longer period of time. I believe if you go back to the inception date, yeah, if you look at it, goes back to all the way to 2001. So definitely been around for quite some time. Now, the returns for this fund at the end of April of 30th, if you look at it, the 1-year return was showing to be up by 22.4%, 3-year annualized return of 6.2%, 5-year annualized return of 12.3%, 3%, and 10 years annualized of 11.8%. Annualized return since its own inception is at 8.4%. And not surprisingly, if you look at some of the top holdings here of the entire 3,717 companies that this fund kind of gives you exposure to, majority are famous companies that we all have heard about. The names like Microsoft, Apple, Nvidia, Amazon, Facebook, Alphabet, Berkshire Hathaway, Eli Lilly, and Broadcom. And those are some of the top holdings. And when you look at it, the breakdown by market sector, the biggest exposure here is indeed to technology at close to 32%. Following that, you have some big exposure to consumer discretionary at 14%, as well as industrials at around 13%. The rest of it as well is showcased for you here on the screen based on the exposure that VTI provides to you. For us, we do have shares of VTI, close to 108 of them, and currently it's showing a total market value of $38,000. And we are talking for all of them in Canadian dollars, just so that we can look at them comparatively. Even though shares of VTI are in USD, we've already converted it to Canadian dollars just so that it's easier for the sake of a comparison. Lastly, we have close to 152 shares of VT, or Vanguard Total World Stock Index Fund. With VT, you're getting exposure to the entire stock market for a low expense ratio of only 0.07%. With VT, also your shares are available in US dollars, and that's why we are holding it in our RRSP accounts. This fund was incepted back in 2008. Year-to-date return at the end of May 10 is up by 7.8% for this fund. I want to quickly show you as well what are some of the country exposures that you get through this fund. Let me hover down a little bit. There are breakdowns by regions as well as markets. So when we talk about the regions, as an example, North America, you're getting exposure close to 65%, which accounts for Canada and US. Emerging markets close to 10%, Europe close to 15%, Asia Pacific is close to 10%, and Middle East, very fractional percentage point. If I click on the market, tells you more specifically by country. Close to 62% of exposure currently is to US. Then we have countries like Japan, UK, Canada, China, France, India, Switzerland, Germany, and Australia, among some of the other ones. If you're interested in the entire list, you can scroll down and find out exactly how much exposure you're getting to what country particularly. Among the top holdings, we still have some of the famous names such as Microsoft, Apple, and Nvidia. Following that, we have Amazon, Facebook, Alphabet, Eli Lilly, Berkshire Hathaway, and JP Morgan. Not surprisingly, that majority of the top holdings, in fact, almost every single top holding here is the US companies, because they are kind of dominating the world when it comes to market capitalization. Lastly, I want to show you the return for shares of VT over the past time period. This is again as of the end of April of 2024. 1 year return was showing to be up by 16.7%, 3-year annualized return of 3.9%, 5-year annualized return of 9.4%, and 10-year annualized return of 8%. If you look at the annualized return for VT, since its own inception, it's at up 7%. To wrap up, quickly showing you that how much dividend income we are expecting as a whole for this portfolio to get annually, hovering close to that $12,300. The average portfolio MER, management expense ratio, for this portfolio is at 0.19%. The reason that it's much higher than like the 0.03 for VTI and 0.07 for VT is that majority of our holdings, close to 91%, is an XEQT, and XEQT has a much higher MER of 0.20%. That said, still it's quite decent when you compare it to the likes of mutual funds, which are easily, I would say, 10 times more in terms of when it comes to any of the fees. Well, thank you so much everyone for watching this video until the end. I hope you found it beneficial and you gained something of value from it. If you did and are interested to get started investing in the market, I have a few recommendations for you. The first and foremost is be sure to check out the Blossom app, especially if you're an investor here in Canada and US. It's an amazing community of investors that come together to share their experiences. You get to see how their trades are happening, what stocks or ETFs they are buying and selling, as well as learn from them through that community learning and by asking your questions and having it responded by other fellow investors. And that's one. The other thing, if you have not started opening an account and if you are in Canada, highly encourage you to check out some of the more popular brokerage firms. Personally, I'm using Wealthsimple as my main brokerage account. Majority of our holdings that my wife and I have are with Wealthsimple. Allows you to trade and invest for free at no commission. I have some referral links that you can use in the description of the video. Definitely check it out if that's something that interests you as well. If you'd like, You could also open up an account in Trade. I use it only for my Smith Maneuver portfolio. I don't love it as much as I do Wealthsimple, as much as I prefer to go with Wealthsimple, but still, it's another alternative if that's something that interests you as well. You can use the referral link. With that, thank you so much for watching this video until the end. I hope to see you all next time.